do a very quick introduction, Dan, and then I'll hand over to you if that's okay. Fantastic. So good morning, everybody. Can you see my screen there? I should say money at the top. So this is about the 6th, I think, in the run of supporting videos to do with the Green Footsteps Guide. Green Footsteps Guide is hosted on our website and has a lot of information on it. But what we were asked to do was to provide some of these short sessions that give a little bit more information for those that might need a little bit more support. So how today is going to work this morning, we've got wonderful Dan from MotherTree here, who's by far more of an expert in money and all things finance than I am in this space. So he's going to help dig a little bit deeper. This is just the opening part of the chapter on the Green Footsteps Guide, and after Dan's finished, we'll have a little bit of conversation and I can go through some of the insurance and other policy stuff if that's useful to everybody here. So if that's okay, Dan, I'm going to stop sharing and hand on over to you.
Yeah, absolutely fine. Thank you so much. And yeah, thank you for having me. It's great to be here. And just really pleased that organizations are continuing to look at where the money goes, because it has such an incredible impact in terms of the world we're going to get in the coming years. So yeah, on this session, I'll do about a 30-minute just kind of walk through, open the box really on what our bank and our pension are doing with our money. And then, as Kirstie said, I'll open the floor to Q&A, and if there's any Q&A from the wonderful people on the call, so Joe, Sam and William, then just let me know. We can cover that. And equally, if people have questions afterwards watching the recording and whatnot, please do get in touch. So I'm going to share my screen and let's get into this. So can everyone see a screen that says 2 changes?
Yeah.
Yeah, great. Thanks.
Yes, you can.
Cool. So yeah, before we get started, a little bit of housekeeping. Please do have your cameras off. It just makes for a more in-person session. If you're looking bored, I'll mix up the pace. It's totally fine. And do try and stay on mute. It just makes it easier for others to listen. And put your questions, comments in the chat, and I will get to those as we go, or in the Q&A afterwards. So MotherTree's mission, our mission is to make it easy for values-led businesses and individuals to reduce carbon, save money, and have a positive impact on the planet. Why we're called MotherTree. So MotherTree is inspired by an incredible scientist called Susan Simard. If you haven't watched her TED Talk on trees, I highly recommend it. She did a lot of research around how trees actually communicate. It blew my mind. Trees communicate with each other through the mycelium, which is kind of like the roots of the mushrooms. And the mother trees are the ones that connect with the most trees in the forest and share the most. And that's what MotherTree, the business, is all about. We want to connect vibrant, brilliant people and organizations who want to do good in the world, and ultimately everybody grows, right? Everybody benefits. So that's why we're called MotherTree. Over the past 3 years, we've explored over 40 different actions that businesses can take to reduce their carbon footprint. We've conducted over 400 hours now of interviews with CEOs, finance directors, mums and dads as well, just to get a real deep sense of what's going on in terms of climate change and how it impacts people in terms of their work and their day-to-day life. And we've calculated thousands of carbon footprints, and we've realized that there is this deep sense of when it comes to the climate crisis. DUR. D stands for down. This is a direct quote. I often get down about the state of the planet and what it's going to be like for my kids, but I don't know what I can do to change things. Unsure action is the U of DUR. I'm taking action, but with all the greenwashing, I'm unsure what the impact is and what else I could be doing. We hear this all the time. I'm giving up meat, but I don't know, should I be giving up flying? And there's just this sense of this kind of guilt and this sense of the unknown. What else can I be doing? I'm doing all that I can, but I don't know what else I could be doing. And then the R of DUR is real action. I want to walk the walk. I hear that all the time. I want to walk the walk and inspire others. We can't afford to wait. We need to act now. Real change happens when we work together and take sustained data-led action. These are 3 quotes of people we talk to. I'd love to hear from people on the call in the chat. Which of these 3 quotes kind of resonates most with you? Maybe just write a kind of 1 if it's the sense of the state of the planet, but 2, if it's you're doing all you can, but you'd like to know more, or if it's 3, you want to walk the walk. You want to get to real action. Let me know in the chat. I'm just going to come back to the chat. 1, 2, or 3 in the chat. Who's going to be the brave soul who goes first? Or is it a quiet morning here today? Kirstie, real action, fantastic. Yeah, feel burnt out. I hear you, Kirstie. There's so much to do. There's so much we feel we can do, and it can feel pressing at times. And yeah, that leads to some really heavy feelings, and it weighs on our energy. 2 from Sam. Want to be a 3. Yeah, Sam, I really hear you. There's that sense of unsure kind of what to do, but wanting to get to the walk, wanting to get to that real action. Sam, brilliant. Yeah, I hear you on that. So for both Kirstie and Sam today, we're going to look at 2 actions that are fairly easy to do, can actually relieve the burnout from this sense of, want to do more, I want to walk the walk. But actually these actions take about 5 minutes for the banking action. But also for people like Sam, you can move from unsure action, I'm not sure what to do, and you can get real focus on the big actions that really can change our world. And I know that can sound a bit superlative, but actually when we get into the detail and the data, we're going to see how much impact banking and pensions have. Monica, number 3, but feel like there is so much more to do. Yes, Monica, I hear you. Thank you for having a camera on, by the way. It's great to see you. Yeah, I really hear you on that. It does feel like there's so much we can do. But look, all 3 of you, Kirstie, Sam, Monica, you're in the right place today. We're going to get into these in a deep way. So we're going to show you how to reach the real action part of and save or even make money. So for Sam and Monica, who are at that 2 stage and want to get to real action, we're going to show you that. For Kirstie, who's hitting that real action, but perhaps feeling a bit burnt out, we're going to show you 2 actions that really change the needle in terms of your impact without taking up too much time. So hopefully you get that sense of really walking the walk without it leading to burnout. So through these 350 hours of interviews and tests, we're very much into test and learn at MotherTree. We've realized that there are 2 actions above all others that have a significant impact on our carbon emissions, on the level of biodiversity, on the size of the gender pay gap, and many other areas that go into creating a healthy, vibrant world. Just by making sure your bank and pension are invested ethically, you can dramatically cut your carbon footprint, get money to places you want to see thrive in the next 10 years without giving up returns or security. So that's what we're going to unpack on this call. Okay, the journey so far. So a bit about MotherTree. We launched in March 2022. We've evaluated and represent over 1.2 billion. I can update that now. It's exciting. This should be billion, and this gets to be 1.2. So you're getting live updates. But it's 1.2 billion pounds that we've evaluated and represent. And we found routes to reduce over, I can't do that carbon calculation in my head, but it's about 10 times what you're seeing there. So it's the equivalent back when we had this slide, 26,000 tons was the equivalent of 130 return flights from London to Rome, right? London to Rome is a 2-hour flight, 2 hours back. That's a lot of flights equivalent in terms of the carbon emissions that we're on track to reduce. The leadership team, so that's me on the left with my son Theo, a little bit about him in a minute. Julia in the middle, she's my wife and co-founder. She's an expert in terms of design and behavior and psychology. She's worked at FTSE 100 businesses. She's worked with the UK's first energy unicorn. She also works with artists like Eminem and Elton John. And that's Craig on the right. He's our chief operating officer. Craig's an award-winning accountant, and a lot of the data that you'll see in this deck is Craig. So he's the kind of brains behind this deck. So a bit about me. So I was on the founding team of Look After My Bills. We had the best ever deal on Dragon's Den. Ted Sclavani and Jenny Campbell were our dragons back in 2018. We saved the British public £127 million in a 3-year period, and we switched energy for over 800,000 UK households. It was while working at Look After My Bills that my wife Julia became pregnant, and it really made me question what the world was going to be like for this child. We didn't know if it was a girl or a boy back then, but we knew this child was on the way, and I started thinking, well, what's the world going to be like when this child's my age, when they're in their mid-30s? And it led to me quitting, look after my bills. I wasn't willing to accept this default path that we're on. And I started researching with Julia what we could do. So we ran, first we interviewed CEOs, CFOs, all sorts of people. And then we ran focus groups where we took roughly 8 people at a time across a month to take 30 actions. So an action a day for a month. We ran 4 of these groups. We did all sorts of things. We looked at our carbon footprint. We went vegan. We got rid of single-use plastic. But 2 actions above all others really stood out: our banks and our pensions. For myself, I realized that my pension, 2% of my pension was invested in oil and gas, 1% was in weapons, 1% was in tobacco, there was money in porn, just things that I'd absolutely not choose to invest in at all. And yet some of my money that I'd been earning was going there. And at the same time, I looked at the bank, look after my bills. We were banking with Lloyds. Lloyds have put over £2 billion into fossil fuel expansion in the last couple of years. It was shocking. My personal bank was First Direct, HSBC even worse. We're going to look at the impact of HSBC in a second, as Lloyds as well. But that was the thing that really hit home. That was where the penny dropped. And we started researching what it meant in terms of carbon footprints for businesses and individuals, in terms of their bank and their pension. And the results were shocking. We found that for most, the biggest source of emissions is from where they keep their cash. And that's because of where your bank is lending money or where your pension is invested. And whether you're an individual or in the healthcare side of things, so we work with a lot of NHS organisations as well in terms of their bank and pension. There are levers that we can pull here. So let's have a look at it. The UK's big 5 banks they've invested over 30 billion into oil and gas just last year. Barclays put in just shy of 15 billion, HSBC just shy of 10 billion. And these are big numbers. Lloyds in 1 year put just under 2 billion into oil and gas. Well, I was banking with HSBC personally, and with Lloyds, we look after my bills. Huge impact, just those 2 banks. So the world's 60 biggest banks put 50 times more into fossil fuel expansion than the fossil fuel companies themselves, right? That includes the 5 banks that we just looked at here. So Barclays, HSBC, Lloyds, NatWest, and Santander. They are 5 of the world's 60 biggest banks. And those banks put in 50 times more than the fossil fuel companies to expansion. To put that in perspective, for every pound that BP or Shell put to expanding their fossil fuel activities, the banks are putting in £50. Can't believe that. In short, money is the oxygen that keeps fossil fuel burning. And this feeds into the overall carbon emissions of a company and of a consumer, of a citizen. Let's have a look at a company. So Google and parent company Alphabet, they hold about $120 billion. That money is held with just a few banks. That money is for paying employees, for tax purposes, perhaps for acquisitions. And based on how those banks are investing, that money has a carbon footprint. And in fact, that carbon footprint is twice as big as all their other emissions combined. And this includes scope 1, 2, and 3. So scope 1 and 2 is kind of like the employees' emissions and the offices that Google has. And scope 3 is their supply chain. Banks are not included in the supply chain. When you include the carbon emissions of their bank, it doubles their overall reported emissions. It's not just Google. It's the same trend for Disney, for Amazon, for Apple. It's almost 4 times higher. For PayPal, 57 times higher when you include the emissions from their cash. And here's how it looks for the typical UK business. So a typical UK company, they've got 12 employees and their average carbon footprint is 75 tons. Now, this is a cross section, right? So if you're working online, if you're predominantly an online business, your footprint will be lower. If you're working in manufacturing, so high energy, your footprint will be higher, right? But 75 tons is the average footprint for the typical UK business. When you add in the bank, it adds another 75 tons. So it doubles the footprint. It's very, very similar impact to Google. So just this one action accounts for right now, and we're going to build it up through pensions, but right now 50% of all of the carbon emissions that a business is responsible for. Very, very similar profile for the healthcare sector. And often for a business, if it's online, this is lower, but this bank one doesn't really change. And so this becomes an even bigger proportion for their business. So we've seen the carbon impact. Let's have a look at the wider impact on values. I mean, the results are just as stark. So the banks that invest in fossil fuels continue to invest in areas that simply do not align to our values. Barclays have invested 6.7 billion into a company called JBS. JBS are known as the world's biggest butcher, and they were responsible for 75,000 tons of illegal deforestation, right? In a 2-year period, 2019 to 2021, Barclays continues to invest about £1 billion in that business every year, right? They've had that report. The chairman's had that report, Nigel Higgins. They continue to invest. I think that is morally abhorrent that this illegal deforestation is going on. Barclays know about this and they continue to choose to invest in that business. NatWest have been named in relation to funding cluster munitions that have been tracked to use in war zones. It's not just NatWest, it's also Barclays. Barclays are a recurring theme in this. NatWest has officially stopped funding that as of 2025. So we're good. We're seeing progress. We're seeing the pressure actually counts, that when we move our money out of these banks and we tell them why we're moving, we can start to see some action here. It's a positive thing, that NatWest is refusing to invest in illegal emissions, right? These are munitions, emissions as well, but munitions. These are munitions that have been agreed worldwide will not be used in war zones, right? There's a very good reason to invest in defense, but it's very different to investing in weapons that like cluster munitions. And HSBC are facing a human rights scandal. So HSBC, the majority of their revenue comes from China. And during the Hong Kong protests, Hong Kong people protested for their right to vote, right? Something we take for granted here in the UK. Those people who protested found that they'd had their access to their HSBC account frozen. They couldn't get to their money because they stood up for a human right that we take for granted here in the UK. That scandal continues to rumble on. So here's an example of a business we've worked with. This is QuickFox Labs, and it is more than just carbon emissions. So this is the brilliant Emma and Amy, 2 female founders, and they recruit people out of prisons to work for them on their business. When we looked at their money at their bank, we realized that their bank was funding businesses that were actively against the social mobility that Emma and Amy stand for, right? These were boards of just white men, kind of it's ironic, right, that I'm delivering this. Boards of all white men, businesses that are not actually promoting social mobility, so it's undermining everything that Emma and Amy stood for. And so we switched their bank. They're now making more money with the money that they hold there. They're having less emissions, but also their bank is proportionally giving more into businesses that promote social mobility and reducing the gender pay gap. So it really backs what Emma and Amy are trying to do. It's not just your bank, it's also your pension. I can promise there'll be better news coming up, but we've got to go deep. We've got to see the reality of this, see the foundations so we can build up from there. So it's also your pension. Pensions is one huge lever in our society. 37 trillion pounds goes into pensions. That's about 8% of global GDP. And about 10% of that, 3 trillion, is invested in oil and gas. Oil and gas companies don't need to do anything, but they can just receive money from these pension providers and they get 3 trillion. Outrageous. UK pension providers continue to invest in oil and gas. In fact, they put 88 billion into fossil fuel bonds and equity. So just the fossil fuel companies, they put 88 billion, and that's 10 times more than they put into all of the FTSE 350 clean energy stock. So if we think about what society that's creating, right, 10x more goes into just these few companies that are causing so much emissions in the world than into companies that can solve these problems, right? Because it's a problem of energy. Where we're producing our energy for our cars, for our factories, for our homes. Well, actually, if the energy can come from solar panels and wind, yes, there are issues there, but those issues are far less impactful on the earth than the fossil fuels. You think about the balance that our money is doing. If 10 times more is going into fossil fuels, that's a real problem for the next 10 years. The opposite argument, 10x more going into clean energy, we could start to sort this out pretty quickly. Well, if we get 10x, 88 billion going to clean energy and only 8.8 billion, or hopefully even less, going to fossil fuels, we could quite quickly transition to a energy infrastructure that's built on clean energy. We have the money, we just are not apportioning it in the right way. Here's what it means for our typical UK company. So remember, typical UK company, 12 employees, their average footprint, scope 1, 2, and 3, 75 tons. When you add in the bank, it adds another 75 tons. When you add in the pension, it adds another 41 tons. So bank and pension together, combined, outweigh all the other actions put together. And what applies for a UK business is also very similar for a UK consumer. When you add the bank and the pension together for a UK consumer, it comes to about double. So it accounts for 50% of their overall footprint. All the other actions account for 50%, bank and pension 50%. So it doubles the traditional footprint. This is a really big opportunity for sustainability leaders. So here's some examples of amazing companies that are living their values. Right Charge, their value is to electrify everything. They put EV charge points in people's walls. So I didn't even realize you needed an EV charge point when you bought an electric vehicle. But there we go. So every time they sell a charge point, they're helping electrify the grid. Climate Change Coaches, an incredible organization. So their mantra is inspire and lead action that counts. So they work with people who are experiencing that climate overwhelm, that climate guilt, and move them into a place of action. Highly recommend them. I've worked with them. And Patagonia, well, they announced that all the company's profits will go into saving the planet. Incredible sales tactic. We saw sales rocket as a result of that announcement. And happily, Climate Change Coaches and Patagonia, they've both decided and they've both taken action on their banks. In fact, Climate Change Coaches, 98% of their emissions was from one bank, and we worked with them to switch it. And now that bank is producing just 4% of that business's overall emissions. A huge change. They've also unlocked more money as a result. So here's the good news. What if doing the right thing when it came to our finances, so things like banks and pensions and so on, also meant higher savings and a more positive impact? Because we've uncovered that it pays to go green. You get less returns in general from the providers who invest most heavily in fossil fuels. Let's have a look at some of the data. Yeah, here's the good news. It pays to go green. So interest rates, we had a look at interest rates. Barclays are just below 2%, HSBC at 2%. Virgin Money and Triodos both outperforming the traditional banks. Virgin Money and Triodos don't put any money into fossil fuels, whereas Barclays and HSBC, as we've seen, put a huge amount. What applies to banks also applies for pensions. We've tracked the standard default fund for pension providers over the last 6 or 7 years, and the green funds as an equivalent have outperformed those default funds often by as much as 15 to 20%. So you get much better returns. It's not financial advice. We're looking historically at the market, but you get potentially better returns when you go green. Pays to go green. So what do we do about it? Well, first, get clarity on the impact of your money. Attending a session like this is exactly one of those things. Get clarity on what's actually happening for you. Next, challenge your banking and pension providers on where your money is going. right? Like NatWest, we've seen they've pulled out of cluster munitions as a result of citizens and businesses saying enough is enough. During the apartheid era, Barclays were the last bank to stop investing in the segregationist South African government. A huge amount of student pressure took them out of that investment policy. We are starting to see the same thing in banking for Barclays in terms of fossil fuels. If enough of us say enough is enough, then we will start to see those big banks changing that investment. And the third thing is move your money to a place that matches your values, right? You can switch, and you can also make sure the door hits the chairman, Nigel Higgins, if you're with Barclays, on the way out. Tell him why you switched, so he knows, because his language isn't carbon emissions. His language and the thing he cares about is money and shareholder value. So let's hit him where it hurts. Let's get the money out of those banks and into banks that genuinely build a future that we want to see. But it is complicated to switch successfully. And perhaps the DER is holding you back, right? As a reminder, perhaps it's that sense of feeling down and not kind of wallowing in that feeling, understandably so. I get that at times. Or that unsure action, I'm taking action, but I'm not sure what else I could be doing. Or that real action, I'm really starting to walk the walk. And hopefully, we get as many of you into real action as possible. So why aren't businesses and consumers switching? So one, it takes a lot of time. For a business, it takes about 50 hours. There's a fear of the security of our money. What if we move to a bank or a pension provider that's less well known? Are they as protected? The truth is they are by the government in the UK. There's a risk of accidentally greenwashing. Moving your money. We've seen this with a couple of universities. They've moved their money to another bank thinking they're getting out of carbon emissions. But actually, this new bank is still investing in carbon emissions, so it hasn't solved the problem that their students asked them to. Some other reasons, it's hard to get access to the best interest rates, so sometimes that's just a part of collective negotiating. It can impact key processes, right? The big fear is, what if we can't pay employees? You have to make sure that process is managed really carefully. And pension and banking, there's confusion on the true impact. As we've seen, Barclays do not want us to know that they put almost £1 billion into a business that is illegally acting in terms of deforestation. They don't want us to know that. So there's confusion as to what's going on. And also, you might just feel like this lady. I certainly do at times, right? An endless to-do list. For her, it's an in tray. For me, it's an inbox, right? Just so much to do. And banking and pensions just doesn't get near the top of it. And so that's where MotherTree comes in. So if you do need a bit more help, we are here to help. We create sustainability leaders who stand up, take action, and influence others to make the change. It means big carbon emission reductions, so you can focus on the biggest sources of emissions. It means huge savings. For the individual, it's an average of 1,500 a year. And it's that chance to walk the walk, to get confidence, to inspire others. We're backed by experts, so our carbon calculations are backed by the brilliant Mike Berners-Lee. Mike literally wrote the book on the carbon footprint of everything. He's the authority on this. If you haven't read the book, How Bad Are Bananas? It's a fantastic book, well worth a read. The impact for the typical UK consumer, so you can save up to 10 tonnes a year in terms of emissions. You can save £1,500 a year. For our latest client, we saved them £7,000. We saved them 27 tonnes of carbon. So it really stacks up. And look, if you want to maximize your positive impact, then I encourage you, if you're an individual, to head to our Climate Champion course. So that walks you through exactly what to do in terms of banks and pensions and other pieces. Or if you're a business, come and have a chat and let's see. I'll just let you know in terms of how it works and if it's the right thing for you. If it's not, I'll happily, signpost you to a different place that can help, because for me it's about having that impact. Okay, I'm going to move back to the group, and I'll move to Q&A. And Kirstie's saying, "Wow, that is shocking." Yeah, it's pretty eye-opening when we see it.
It that was incredible. Like, a lot of food for thought there. Like, stuff that I didn't even know. It's horrifying, actually, isn't it? When you think about how much impact that money has, that it's kind of unseen to us because it's just numbers in an app on your phone, isn't it? You know, and to actually really think about where it's actually going, what it's been invested in, beyond even the green space in terms of ethical investment as well. It's quite worrying.
Yeah, and the banks, they don't want us to know about it.
No.
And so the more we can see it with eyes open, the clearer action we can take. But Kirstie, the really good news is for an individual, it takes about 5 minutes to switch a bank account.
Yeah.
The process in the UK, as long as it's covered by the current account switch guarantee, is really solid. And so, to your point earlier about that risk of burnout, it can feel like, oh my gosh, another task, like really? But actually the solution is one of the easier ones.
Yeah, and I would say I can back that up, because since I first met you, which was around a year ago, I actually went and did it with mine, and it was pretty straightforward. Something I'd been terrified of doing and putting off as an individual person. Actually, it was pretty simple. I know for some of our organisations, it's maybe more challenging. So, like you say, it's about paying people. It's all the things that are attached to your bank. And so, is there? You just said about the banking sort of protection from transferring as an individual. So anything like that in the UK for businesses and VCSE organisations?
Like that, there is, but it's not at the same level as individuals. So it just needs to be managed a little bit closer.
Okay.
What we make sure we do for all our clients is we have contacts at either board level or C-suite level with the banks.
Yeah.
So anything is like even remotely at risk of going wrong, I can literally pick up the phone to one of the chief operating officer, chief commercial officer, and just say, look, this is, it's not going smoothly. Let's say it's for Cornwall VSF. Can you get on this? And to their great credit, I mean, we very rarely had to do this, but to their great credit, they always make sure it's getting the right people to make sure everything does go smoothly.
Yeah, that makes sense. Thank you. Sam.
Hi there. Thanks for all that information, Dan. Yeah, I agree with Kirstie. A lot of it is like, wow, when but when you see it on that scale. I was going to ask, you highlighted like the worst offenders in terms of banks and that kind of things, but in terms of, I'm obviously from a voluntary sector organisation, in terms of good banks, if there are such a thing, or better places, would you have any recommendations there?
Yeah, absolutely. Sam, great to meet you. So yeah, in terms of recommendations, so Triodos are one of the greenest. They are officially not taking on clients, but there are a few criteria where they will. So it's well worth sort of exploring that route. Virgin Money, very good. Your building societies, or because they don't invest in fossil fuels, they're investing in housing stock across the UK, are a decent bet. If you really wanted to go to a household name, like if often the finance director is like, we just need a household name, right? They're kind of a little bit slow off the mark. Sometimes some of them are absolutely brilliant when they're forward thinking, they're incredible. But if you really, it was kind of household name was the sticking point, then NatWest and Lloyds of the big five are the ones who are investing the least in fossil fuels. And NatWest in particular seem to be making the right noises to getting out of that sector. The other good thing about NatWest is about for every pound they put into fossil fuels, they're putting about 12 pounds into green energy. So it's a decent ratio. Whereas Barclays, it's the other way around. It's about 20 pounds to fossil fuels, a pound to green. So yeah, those are your options. There's definitely a cluster of banks who refuse to invest in fossil fuels. The Cooperative Bank is another one that's worth exploring, Sam. What I'll do is I'll post a link on the chat, because we have a list on our website of about 16 banks for free. So there's no kind of input there on your side to see the list.
Yeah, we actually took a lot of that data and popped it into the Green Guide. So on the Green Guide, we've got Triodos, obviously, Co-op Bank, and Reliance Bank, which is a bit like Co-op Bank. CAF Bank is who we use, which is the Charities Aid Foundation. The only thing with them I say is they are based in America, so sometimes it can be a little bit challenging. Unity Trust is another ethical bank we've got here. Nationwide scores well compared to other more commonplace high street banks, but they're not currently accepting new clients, but it's one to keep an eye on. And then the other thing that we were asked to look at was which banks sync with which money management tools like QuickBooks Zero, etc. So there's a list within the Green Footsteps guides, because obviously if your financial arm works with a certain book and it doesn't link with your bank, that can cause problems too. So we've got all that information there too, if that's any help, Sam.
Brilliant, thank you very much.
Yeah, that information came out of a mixture of MotherTree and a series of workshops and information gathering of best practice from organisations that are what they're currently using and what's working well and what's challenging about them, if that's helpful. Any more questions from the wider group there? Joe and William are still there.
Hi, Monica here.
Hi. Yeah, I can hear you, Monica.
I thank you so much for a brilliant presentation and such amazing data, quite scary. I just would like to ask, it seems to me that the ethical banks are kind of more shut to public and it's more difficult. There are barriers to get into ethical banking, on the opposite of the, let's say, evil banks are very inviting and very easy to access. So if you can explain what's going on there.
Yes, good question, Monica. And my understanding of that is those kind of e-banks you refer to, that's like Monzo and Starling and Revolut, right? They're kind of, they're online, you can't go into the branch.
Mm-hmm.
Cool. That's also my interpretation of them. So yeah, the greenest banks like Triodos, the Cooperative Bank, their operations are more complex than a Starling and a Monzo. They also have trading arms, so they have more influence in terms of where our money is going, right? So the Cooperative, Triodos, what they tend to do is they open up tranches for public to join them, right? So there might be a 3-month kind of switch incentive. The Cooperative did this late last year. I think it was £200 if you switched your current account. Triodos, they don't really do incentives, but they are open to the public. From a business perspective, they are harder to get into, but it's possible. From a business perspective, you know, the Cooperative, it's open for business. They're very happy to bring in new business clients. Starling, Monzo, Revolut, those kind of banks. So the reason their operations are simpler is because what they've basically done is they have an app, and then all their banking services sit on other banks. So they have much less influence in terms of what's happening with the actual money that's held there. So of those three, Starling are the greenest. They're not as green as Triodos and the Cooperative. They hold less influence, but are greener. Monzo, there are issues that we've seen in terms of where the underlying banks are investing, and also Monzo hold a lot of government debt in Russia, which we don't agree with. There are some issues with Monzo, and Revolut, even worse. Revolut are the most opaque, so they share the least data, and they also have the worst employee record. They treat their employees very badly historically. So if you wanted to go, and I hear you, Monica, it's easier to switch to those banks. They're kind of just a little bit more, you know, their operations are slicker, right? They've been around less time. They've got less kind of technical debt, I guess you could call it, but they're just newer, and it's built for the citizen, for the customer. So of those three, I'd recommend Starling, given they're the most transparent, and they're really thinking deeply about how they influence the banking infrastructure that they sit on, which are banks like HSBC, NatWest, Lloyds, you know, your bigger banks.
Does Starling take business accounts as well?
Yep, they do. It tends to be on the smaller side. but yeah, they're definitely open for business. The thing with business, and the reason that MotherTree exists for that business side, is it's just really tricky to navigate. You could fill in a whole form for any of the banks. This includes the fossil fuel bad guys. You could fill a whole form. At the end of the form, there's a risk of them just saying, "Oh, we're not going to take your business." It's like, oh, come on, I've just spent 30 minutes, 40 minutes gathering all the data. It's like, oh. And so what we've done and what we do is we've built routes through. So we can't guarantee that you'll be accepted by, say, a cooperative or a Starling, but we have a much better guess because we've worked with so many businesses and because we know the people on the other side of the fence. So we can say, look, we've got a business, they look like this. Would you accept them? They might say, no, that's fine. We'll have the next conversation. They might say, yes, great. What do you need to see? And so we shorten that application time. And also there's the confidence to switch.
Yeah, I want to have a little chat with you offline actually about some way of me potentially trying to get a fund set up to sort of help support VCSE organisations to access your support, because obviously time poor, money poor, is what goes hand in hand in our sector. Because I think sometimes it's that fear of, like you say, spending all that time when you're very time poor and then not being able to get the end result that you want. That's obviously something that, and we're in often precarious financial landscape in the VCSE, reliant on like different funding revenue from here, there and everywhere. It's not the same as running a business that has sells products or whatever, when you can kind of predict the markets and stuff. It's very different working in our sector where the money comes from. So that'd be really helpful. The thing I wanted to just mention briefly is insurance, because you haven't really spoken about insurance, but it's something that came up in our research. I don't know how much you know about it, Dan, so feel free to jump in if there's anything else. But we again, it's another space where money moves a lot, money sits in certain places. So we did a bit of a deep dive into that, and the best version for the southwest of England that we've came up with is an organisation called Nature Save. Again, this is in the Green Guide. They're an insurance broker and they're based in Devon. They offer only ethical insurance for charities and not-for-profits and some businesses too, including public liability, premises assets, etc., etc. So there's a load of information there. They're very user-friendly, very competitively priced, and that was something that quite a lot of people mentioned. Actually, they were going through the big insurance providers, and actually when you start delving down into the information behind them, again, it's not dissimilar in terms of the picture that we hear about in pensions and in standard banking. These are a part of the financial sector that a lot of money is being held and moved around, so it's worth scratching beneath the surface on that. And another local example of how diversifying pensions really helps. So Cornwall Council, a friend of mine, was chairing the pension committee there about 4 years ago. They withdrew all their pension investment out of anything to do with fossil fuels, reinvested it into green energy, and the fund has massively flourished financially and ethically, obviously. So it's really worth taking those leaps of faith. Sometimes I know to get to the point where they were able to do that was a challenge, but the impact of being bold and brave sometimes is really, really profound. So I just sort of like urge everybody to, even though it's scary, be brave enough to take that leap of faith, knowing that you're doing the right thing and you do have this group of people around you that can support you.
And I back that, Kirstie. Nature Save is a really good insurer. And what we've seen is insurance is one of the levers. So in Vietnam, they had all the money they needed to start coal mining. And then the insurers said, we refuse to insure it. And 90% of that money went into green tech, into green energy, right? So windmills and solar panels.
Yeah, and that's the thing, you need to know, and it's so hard, it's such a minefield out there. So I would just urge anybody to, if you don't know, ask, because people like us will know and we'll be able to say, actually, no, that's not greenwashing. And that's where the Green Footsteps Guide came from, because we had so much feedback about it being so hard to sort through what the truth is in amongst the noise and the will to do stuff. And obviously businesses cottoning on to that being a really great marketing tool to market yourself as green with a lovely badge you printed off the internet that doesn't really mean anything. We know that as consumers it's really hard to make the best choice, which is where the Green Footsteps Guide came from, is to try and give as much as reasonably possible really well researched and resourced advice. So I'd really highly recommend hooking back into Dan's website, MotherTree, because you keep it updated regularly. You can get the data from the stats, which is one thing I use your website all the time when I'm talking to people, Dan, for that reason, because you've got that live evidence base that you can actually use to support the things you're saying, which really helps when you get into the edges of people being a little bit defensive around greenwashing of their whatever bank they're using, etc. It's quite useful actually when you're having these conversations to have that bit of valid resource to back up what you're saying. So thank you for doing that and keeping that updated. It's really useful.
My pleasure. I'm glad it's having an impact.
Fantastic. Is there any other questions? Because if not, we'll leave it there. Any other questions from any of you? No, well, Dan, don't go anywhere, but I'm just going to round it off by saying thank you so much to everybody for coming this morning, and thank you, Dan, for giving your time to come and support this. Anybody that's watching this is the recording afterwards. If you go over to the website, you can go over to either cornwallvsf.org and it will lead you to the Green Footsteps Guide. Dan, what's your web address?
It's mymothertree.com.
Fantastic. So if you go onto either of those and do feel free to get in touch with me if you need any further support. Thank you so much for that.